back. Joining us now on Market Gurus, Chakri Lokapriya, CIO and MD at TCG Advisory. Morning, Chakri. Thanks for coming by this morning.
Morning.
Chakri, before we talk stocks and talk sectors, I want to ask you what you're making of the current bull market. Are we in a structural bull market with near-term volatility, or things have changed and it's not going to be a good-looking picture in the near term at least?
I think from a domestic perspective, we are clearly not, right now we've slowed down for demonetization reasons, and that'll probably take a few months to play out before normalcy returns. On the other hand, the developed market, after Trump, is beginning to see the first signs of a bull market, and an extended one at that. And hopefully India will benefit once we come out of the demonetization bit.
Chakri, we've not reacted too negatively in terms of what has happened. So we've gone from levels of 7,800 from Feb to 9,000. We've eased off now at 8,100 sort of levels, which to my mind is not a very dramatic reaction to all those black swan events we've seen this year. So if we've done okay, despite everything that has been thrown at us, doesn't that make you a little more optimistic then?
Indeed. Well, like you rightly said, these are all big black swan events. And India now, we were at the verge of an earnings recovery before demonetization. And now that earnings recovery is postponed by a few quarters. As a result, you'll see GDP growth coming down to maybe 6%, FY17. And then 2018, assuming that the government turns and becomes more proactive and returns confidence to the system, you can see the bull market returning very quickly.
Morning, Chakri. I'll first start out with just fund flows. And I want to keep the international fund flows on the side only because we don't know what they're doing. But I was looking at some of the corpuses, including the corpus of the National Pension Scheme, which now is pretty much closed. I think there was a report saying around 13 to 14 billion. May not sound like a huge amount, but in the next 5-6 years, it will head to 70, 80 billion. And then if you add up the corpus of insurance companies, private insurance companies, they are becoming significant. Just in terms of this money and the fact that some of these are defined contribution, which means you have to put them in stock, could we be going into an autopilot phase as far as domestic investing is concerned, which is essentially what the set of stocks, and you got to put that money there?
Indeed. I think, and clearly, after demonetization, I know we've used the word 3 times in the last 2 minutes, but it has changed the way people will think, hopefully, about savings. And so other asset classes going down, whether it's gold or real estate or even fixed income for that matter, people will start moving towards equities, and these kind of defined contribution schemes will only help accelerate that process. So over time, as confidence returns, we'll see greater allocations happening to this, and that indeed is a very powerful thing.
So, Chakri, now I wanted to, we've kept the fund flows on the side. Now I want to come to psychology. And I've been trying to see what the international press has been saying, or some of those international economists like Krugman, let's say The Economist, the magazine itself. And generally they've said this has been mismanaged. I don't want to get into because it's an opinion. But what concerns me sometimes is that finally these are influential magazines and somebody reads them. And just like I don't know anything about China, I read a magazine, I think it's doing well or it's not doing well. Many people are not in India. They're just looking at something and they either get put off or they don't know. I want to ask you about the impact on the psychology of international investors as far as the market is concerned, because psychological impact is usually longer term. And for you to change your mind about something takes time. What do you think is happening there?
As you rightly put, I strongly believe that perception is reality, and confidence has been hit because of clearly there is the execution has been lacking. Against this backdrop, what is important is to have a consistency. We went into this year of, not this year, into the last couple of years, of less government and more governance. And over the last few months, we've seen a host of changes in laws, regulations, flip-flops, which is not a confidence-boosting thing, either for a domestic investor or, more importantly, for a foreign investor, because they're watching things from far. While I guess they agree that demonetization has a good intention, the execution has been found wanting. But, this is a temporary blip to growth. Assuming that this whole thing is complete by, let's say, March or April, things should start limping back to normalcy.
Chakri, taking a cue from demonetization, banks are sitting with huge amounts of cash in their hands and they don't know what to do with it. Do you think this is, of course, going to boost lending and clean up a lot of corporate bad debt that we were looking at till a few weeks ago? Or is this all just going to go back in the hands of the consumer?
I think that's a great question, and I think it's a dilemma because right now what is happening is people are going in with their old notes and depositing it in the bank because they're going to turn worthless after December 30th. Now, after December 30th, we'll see the flips happening. They'll start withdrawing notes. 90% of the cash has gone back into, or the cash in the system has gone back into the banks. Only 40% has been replaced out. So over the next couple of months, as the balance money is being replaced, people will start, and even corporates will start withdrawing cash because you need cash for circulation. So my guess is, I reckon that of the entire 14-odd trillion, a good chunk of it needs to come back in circulation and therefore won't help in lending.
So in that case, Chakri, what is your view on banks and NBFCs? Are they a space that you'd avoid then?
Banks, PSU banks, I view them as growth stocks, but beaten down growth stocks. And at some point when normalcy returns, they'll start doing well. And the valuations are phenomenally low at this point in time. On the other hand, NBFCs have to learn to live a new life with a new business model because the last mile for NBFCs has always been physical cash. And now they need to change their business models to move to the cashless and the digital kind of a world, which may not happen depending on the speed with which different companies can approach it.
You were talking about banks, and I have an account with the HDFC Bank, and I could as well have been in a Kirana store. Suddenly my relationship manager has vanished. He never picks up the phone. The bank doesn't want to deal with you. You're standing in line like any ration shop. They don't care who the customer is. I'm sure it's with all other banks. I'm just talking about my own experience. I'm saying they've wasted 2 months actually turning into massive teller machines or teller human beings. And they don't do any bank function. Actually, you can't do anything in a bank right now. They don't even let you get in. What is going to be the impact on their financials? They can't talk about 20% growth if for the last 2 months, and it may continue for another 2 or 3 months, they do nothing but basically do the most basic function of a bank, which is behave like a teller.
This earnings, the earnings for this quarter for banks is likely to be downgraded quite significantly. And also, a lot of the banks have been thrown out of gear and basically exchanging notes, and therefore other activities such as lending has taken a hit to an extent. And that will all show up, and also bank credit, you can see that is in the low single digits. And this is something which is unheard of in an emerging economy. It should be in very high double digits. So for this to fix itself, they don't have personnel. They couldn't add people in a hurry in the last 2 months to keep exchanging cash. So this quarter is going to be, I don't think this quarter is so important from an earnings perspective because it's going to be a bad earnings-wise. It's a question of how fast will things return to normalcy after March.
So Chakri, let me just rephrase this question. Actually, I was just wondering whether we're taking a very negative view of listed stocks for demonetization. And what was going through my mind is actually some of the cleanest companies, when I say cleanest in terms of paying taxes, are listed companies because they just simply have to pay tax, report to the Securities and Exchange Board. Could it be the flip side is that you will see massive creative destruction in the unorganized space, in the unlisted space, where these smaller companies that were working on cash basically now don't know what to do. And the business actually shifts to the guys who are in the listed space because they had the best infrastructure to handle a non-cash business to start out with. Is that something that's been looked at and should be looked at?
90% or a big number like that of the employment in this country sits with small companies. So while listed companies have the advantage of infrastructure and also the requirements and the regulations that meet it, they'll be the first off the block. But the smaller ones, and life always has to find a way because today's large companies were yesterday's small companies, I think we will find enough innovative small companies who are far more nimble, who are able to establish these structures. Just like you went from no phone to mobile phone, so these guys are going to go from cash to cashless society, hopefully.
sectors or spaces in your mind could, of course, take advantage of this digitization? So while there are a lot of sectors that are going to be suffering, low-end demand is definitely impacted. But I'd like to hope that there is some space or some area in the market that could actually gain from what we've seen.
Eventually, it's going to be banks because as you move to more credit cards and debit cards, and as those transactions, as a percentage of total transactions increase, and that's an easiest way to capture the entire gamut, because just about any sector, any company needs to deal with a bank. And a consumer from moving away from cash payments to a digital form of payment, again, it has to deal with the bank. I think that's the best way to deal with it.
So with all this behind us, we of course have all our eyes on what could come out of the budget. Expectation is that there should be a lot being done by the government to boost demand and of course create employment, because clearly the likes of Ashu have indicated that employment is a concern now. Are you, on back of that expectation, would you go out and sort of start investing in beaten down sectors like infrastructure right now?
Infrastructure, I think there are two halves. One is where the government is involved, the public infrastructure. There probably what you call earnings and employment will come back faster. As far as private infrastructure is concerned, utilization levels are very low, and therefore new capex is unlikely to happen anytime soon. And so from that perspective, we'll see public infrastructure continuing to recover slowly, while private capex will actually take a backseat because they'll probably delay new product launches, new initiatives until they sort themselves out of the current demonetization transformation.
Chakri, I want to ask you a frank question, which is not so much with your official position, but what you personally think, which is that, massive economic experiments cannot be figured out by anybody. So all of us are in guesswork. I mean, people couldn't figure out Trump was going to be the president 2 hours before he became the president-elect. So the fact of the matter is we have very poor predictive ability as humans. So we can't predict Brexit, and major events just don't work for us. We basically go into, a deer staring into glaring headlights. So right now, whatever it is, the general narrative is, oh, it's very good and it's going to turn out to be better after 2-3 months. But when I can't predict the short term, then certainly I can't predict the continuum of short terms, which is the long term. So leaving that aside for a moment, I want to ask you this, that there is human psychology. And if I am not sure whether I can withdraw 20 grand, or whether tomorrow I can deposit 20 grand, or whether the 2000 note may get withdrawn, or whether I will be able to keep gold at my house, it just creates a cycle of a psychosis of not spending. I want to ask you about that. Do you believe that's happening? Because we're a massive country. That psychosis is more dangerous than whatever is happening on the ground.
As you rightly pointed out, Brexit, and now Trump has turned out to be the best thing for stock markets, at least in the developed world, because now he is going to spur growth. Now, leaving aside what his other opinions may be, as far as stock market is concerned, or economy is concerned, is going to create a lot of jobs. Now, from that perspective, we're going into, India is going through this transformation as Modi tries to transform the way people think. It's like that fairy tale where a frog eventually turns into a prince. And meanwhile, India has to endure being that frog, and how quickly it transforms. It can happen magically as the turn, a flick of a switch, with just one word, which I believe is confidence. So all you need is some high-ranking departments coming out and saying, look, all is done, back to work, let's get on with it. And then that would spur companies to take the next steps, which creates jobs.
Go on.
I was just, while you were speaking, I was just trying to go through, the thought process of, it's not necessary that everybody is buying retail. There is a lot of business to business. And those transactions were actually largely always on. So if there is an impact, is it only an impact on front-end companies and actually not back-end companies? So let's say if I was an automobile manufacturer, I may be out, but the back-end companies were anyway being paid in check. Maybe what has happened is that slowdown has hit me. Could it be that we have to look at B2B, let's say chemical companies and all, differently than we are looking at retail. And if you can share some investment themes there, where that cycle has actually not been hurt because it's largely supplying to institutions and buying from institutions.
Yes, clearly, you see, India is a consumer-driven country. Still, 2/3 of this is a consumer. On the other hand, the last mile is always the consumer. The B2B is the in-between part. Now, chemical companies, petrochemical companies, like you mentioned, are actually in a sweet spot. Demand is higher than supply. Prices, therefore, are firming up. You will see massive earnings upgrades because of this demand-supply equation. And they are largely B2B companies. And whether you have a PTA manufacturer supplying polymer to various Phenolics of the world, Supreme Industries of the world. So those kind of companies are actually in a sweet spot, and also export-dependent companies, whether it is a textile company or IT services, and they are more B2B and also less dependent on domestic policies.
Chakri, are you buying mid-cap IT right now, or IT is a pack?
Mid-cap IT, yes, because the valuations have corrected, and also the growth has bottomed out at 8-9%. And January is a good month where you see new budgets coming out in the US, IT budgets coming out. And so when you look at the space of things, they have the greatest earnings visibility at this point in time. And so clearly, mid-cap IT and IT in general, yes.
Is the space that you buy into. Also, another sector that's been in focus recently has been the pharma space. Usually, it's a stock pickers market, at least in this pharma sector, but there's been so much of news, so be it negative news coming from the likes of Sun Pharma and Aurobindo Pharma in focus today, or mergers and acquisitions, the Singh brothers looking to sell some of their stake. How are you approaching this sector? Do you think it could continue, or rather you would be overweight on the pharma space?
Pharma, and now pharma is expanding into other parts of healthcare, like the diagnostic labs and hospital chains and things like that, which are all good earnings growth companies, strong earnings growth companies. And second, as far as pharma is concerned, they are largely export dependent. So I would look at the more export-oriented pharma companies versus the domestic-oriented pharma companies, as you will see a fairly visible growth, at least for the next couple of years.
So just again, from perception perspective, Chakri, I'll ask you. I mean, I'm sure when the Bolshevik Revolution took place, they said it's good for the people. When Pol Pot said, everybody leave your jobs and go to the farms, it was good for the people. So good for the people is a concept, but in democracies, the problem is it's not free markets. So I just want to ask you this. How significant is the impact on foreign flows? Because at the end of the day, we still need foreign capital. And I find a divergence of view when I speak to fund managers in India and fund managers abroad about how they are looking at this market. And many of them, as you know, Chakri, just simply do what we call auto investing. They use an index, an MSCI index, or people just put money in ETF. And when a country becomes popular, you'll get billions of dollars into an ETF. What happens to that money? There's a very large chunk, which is just blind capital that just follows, news flows, so to speak. What has happened there?
Post Trump election and post demonetization, you've seen outflows from India, whereas inflows into other GEM dedicated emerging market funds in the last week or so last couple of weeks. Foreign flows are very important. They represent, and in fact, RBI has been trying to defend the rupee because RBI had $10 billion worth of selling by the FIIs. So that perspective, it's clearly very important, and which is growth. And when growth has slowed down, so now the question is, the next step is to wait to see how fast growth comes back, because this was an artificial break on growth. Growth was just reviving as we were going into this quarter. And demonetization came and hit on reviving growth. So very soon, growth can come back if the government or the tax officials are not vindictive, they become more inclusive, and encourage businesses to actually start investing.
Chakri, just one thought on natural gas. Actually, India can consume another 3 times the gas we have. Our problem is that we still don't have enough LNG facilities to bring the gas into India, decompress it back and push it out. Now, I mean, there are very few companies in that field, and what I'm saying is demonetization or no demonetization just doesn't impact this. Petronets, the gas authorities of India, and I'm not talking about petrol, companies that prepare the saw pipes. Is that a sector you'd look at? Because India's consumption of natural gas is nowhere close to, let's say, a Japan, and natural gas prices have fallen to a level where it's become cheaper than coal in certain cases. Has the market missed that inflection point?
I think that's a very huge sector, and also with the advances in technology. They're both downstream and upstream companies. Now, the upstream companies are the Gas Authority of India, GAILs, etc. And the downstream companies are the Finelix Pipes, the Supreme Industries, and a bunch of other companies. They're making technologically advanced products these days. So it's a large universe. I think polymers as a space will do phenomenally well over the next 2 or 3 years, and we'll see big earnings upgrades, and that's one sector which we have a lot of expertise and we're actually focusing on.
Chakri, very lastly, what does your gut say? 2017 could see the markets make new highs?
2017, as we go into maybe March, April, would be the beginning of an upturn.
Right. Chakri, another space that I just want to pick up on, and I don't think we've talked about it, is the metal space. How are you approaching this sector? Because a lot of people who initially were talking about how 2017 could be a good time for commodity-driven stocks, but especially on back of supply curbs coming from China. But if you look at historic data, commodity stocks have actually destroyed wealth. How would that play out this year, or going ahead rather?
It's all started off with the US election. Big infra push, $1 trillion spent, has pushed up commodity prices because you need steel and the rest of the commodities to make bridges, roads, dams, and all that good stuff. And that is a good thing because they're also consumers of Indian products and services. So I think metals are in a good space going into 2017.